Welcome, investors. Today, we are going to do a deep dive on a stock that has been soaring high for quite some time now, and I think conditions are well in place for a reversal of the trend. And in fact, the stock only recently saw a drop of about 40% in its share price from its all time high amid a series of rumors and some facts. So, the stock in focus today is Kalyan Jewellers Limited, and the recent correction the stock so rightly deserved in the last 1 month. Let's try to understand why I say so rightly deserved this correction. So let's go back in time a little bit in August of 2024 when suddenly the company rushes to meet with potential investors. And here on the BSC website, under corporate announcements of Kalyan Jewellers, uh, we can see here in their August filings, this is an investor meet. Again, announcement of investor meet. So there are a lot of investor meetings that this company has been taking, and they were lined back to back with several names in the industry. So they all, initially they all looked regular meetings at that time, but the truth came out soon. 21st of August 2024, the company notified through an announcement of a share purchase agreement between the promoter group and the seller Heidel Investment Limited, which is a Warburg Pincus owned corporation. And so I've put out all the files in this. And here we can see the share purchase agreement which came out on August 21st, which says that pursuant to the share purchase agreement, Heidel will be selling about 2.43 crore equity shares, representing 2.36% of the share capital of the company, to the promoter for a purchase price of 535 per share, aggregating to about 1300 crores. The transaction is subject to promoter arranging requisite funds through financing to consummate the transaction. And through this another filing on August of 23rd, Heidel also notified that they are selling about 7 crore equity shares of face value of 10 each of Kalyan Jewellers India Limited, representing about 6.81% of the total issued and paid up equity share capital of the company through block deals on the platforms of BSC and NSC. Right? So now suddenly the investor meetings start to make more sense, which is that the company needed to find potential investors who could buy the shares being sold by Heidel through the open market, since part of them were also absorbed by the promoters themselves, which we saw here earlier of about 2.36% of the share capital of the company. And in another filing made by Catalyst Trusteeship on the 26th of September 2024, which is right this one, an investor realizes upon reading this notice that Catalyst Trusteeship Limited, as a debenture trustee to the secured parties in connection with the pledge over the equity shares of Kalyan Jewellers and certain undertakings and arrangements entered into by the promoters and KJG Consulting Private Limited, the company owned by the promoters under which these shares were being bought. So an investor, upon reading this, he realizes that the purchase of shares made by the promoters had been financed through debt, which was secured by way of pledge of equity shares of Kalyan Jewellers, which the promoters owned in their own personal capacity. Here is another filing done by the promoters, and this was in October. Right, this was on the 2nd of October, wherein the promoters are disclosing. So here we can see promoter holding already encumbered, and these are the details of events pertaining to encumbrance. So this is telling us nothing but just the creation of pledge of equity shares and how many shares were pledged, by whom the shares have been pledged, and the party to the pledge. So here we can see that earlier there were about no pledge of shares, promoter holding already encumbered, which was nil, out of his total holding of about 18 crore shares. He is pledged with Catalyst Trusteeship Limited about 4.25 crore shares. With Bajaj Finance, about 46 lakhs shares. So this is the number of the shares that is being pledged. With Aditya Birla Finance, another 37 lakhs, 60 lakhs with Infina Finance Private Limited, 44 lakhs with Tata Capital Limited, for a total of about 6.18 crore shares out of his total holding of about 18.6 crore shares, which has been pledged now. Now, if I just pull up my calculator and we see, so 6.18 crore shares out of a total about 18.6 crore shares, that represents 33% of his holding. That means that 33% of the holding of this promoter of about 18.6 crore shares have been pledged. Similarly, another promoter, Mr. Sitharam Trikur, again holding the similar number of shares, 18.6 crore shares, has pledged about 6.34 crore shares. Again, roughly the same kind, 33% of his holding. The rumors about the management bribing some officials of an AMC started spreading on social media, and share started its downhill battle. As could have been expected in case of pledged shares whose values has gone down, the lender should call in for a margin call. And the same played out with Kalyan Jewellers as well, with promoters coming out with another note on the pledging of shares, wherein the total number of shares being pledged by the promoters has now gone up from, as we saw currently, about 12, 13 crores to about 16 crores now. And this was done. Okay, so this is the disclosure dated 20th of January about the creation of pledge of equity shares of Kalyan Jewellers Limited by the promoters. And here we can see now, see again on 17th of January, there has been a creation of pledge by Mr. Ramesh Trikur to about 97 lakh shares, which takes his earlier pledging of shares to from 6.18 crore shares to now about 7.15 crore shares. Again, 17 January, pledge of shares 20 lakhs with Bajaj Finance, 11 lakhs with Aditya Birla, 27 lakhs with Tata Capital, 13 lakhs with Infina Finance Private Limited, taking his total pledging of shares to about 7.88 crore shares. Similarly, for the second promoter, Sitharaman Trikur, his pledge of shares went from about 6.34 crore shares to now is about 8.24 crore shares. So 8.24 crore shares, this is 8.24 crore shares of one promoter and about 7.88 crore shares of the first promoter, and the total shareholding, as you saw, is about now 16 crore shares which have been pledged by the promoters, which, dear investors, let me tell you, from a total outstanding share count of the company is about 103 crore shares. That represents about 15.65% of the total number of shares outstanding of the company. With the downward trend in the stock continuing, an investor should expect the lenders to come out for a margin call yet again and pledge count to considerably go up, which sort of creates a vicious cycle of its own, putting downward pressure on the stock because of scare amongst investors about the future uncertainty and increasing pledging by promoters. Since the current valuation of Kalyan Jewellers offers an intelligent investor a yield of just about 1.2% or a cash flow multiple of about 83, which implies an extremely rich valuation, I find it extremely difficult for the company to find buyers of its equity at these levels to sustain the stock price momentum. Until, of course, the management is able to exercise control by way of some external forces. And the way that I have arrived at the valuation of Kalyan Jewellers is, if you just head over to the cash from operating activities and you subtract from cash from operations the fixed assets purchased by the company during that year, which is the capex done by the company, and you take an average of that. So that would come to about 550 odd crores. And you can do the math here. 629, 264, 1013 and 1322, and adjusted for capex comes to about 2732 for a duration of about 5 years. So that's about 546 odd crores. And taking the current market cap of the company, which is about 45,450 45. So 546 is the cash from operations, and the yield at the current market cap from this free cash flow comes to about 1.2%, or we could also call it a multiple of about 83. Moreover, even if the management is able to put an end to this downward spiral, I detect incompetence in the management's capital allocation decisions, which is evident from the fact that number one, they bought these extremely overvalued shares of their own company from Heidel, putting the companies, or as I would like to call it, shareholders' money to an unproductive and unworthy use instead of using it for growth or deleveraging or maybe even acquisitions. Secondly, upon reading the annual reports of the company, an investor would come to know of the management buying aircrafts for their use from company money again, which they turned to selling in the last financial year, and now they're calling them as non-core assets. Thirdly, if an investor reads go through the annual report, and we'll go through that together here, and if we go to their board of directors and just try to read their profiles, right, this is the board of directors and a little bit about their profile. An investor would realize that a lot of the board members are from the banking and the capital markets side. Now, see, she's an independent director having several years of experience in policy and banking sectors. 31 years of experience in the banking sector, 20 years in the field of advertising, several years of experience in banking, teaching management, and accounting. Uh, Now, whenever I invest, I prefer to invest with companies whose boards are comprised of the stalwarts of that particular sector or industry, which then that helps the management in guiding towards greater pastures in the direction the company should actually be moving in. Fourth, the management established a subsidiary, Kalyan Jewellers FCD UAE, which was incepted in 2013 with an investment of about 720 crores, and it used to do about revenues of about 127 crores in FY21, which now only does about 7.6 lakhs in FY24. And this we can see if we just head on to page here, that is their subsidiaries, Kalyan Jewellers FCD UAE. It has done a turnover of about 32,000 AED, which if we adjust it for currency, this is 32,362, and 23.5 is the rate of AED. That is about 7.6 lakhs turnover in a year, on which they are losing about 13 crores. It's wondering to me, how can a company lose 13 crores on a sale of about 7.6 lakhs? Also, let's not also forget the assets. This company, this subsidiary alone, has an asset base of about 1686 crores, right? And all of this entire 1686 crores is the money that is basically earning nothing for the company. Also, if an investor heads over to page, this is page 85, and an investor would see these transactions with related parties where the company has made some purchases from the promoters of the company to the tune of about 24 to 30 crores in the last 2 years. This transaction should also raise concerns in an investor's mind about the integrity of the promoters, and further inquiry should be made since no material information has been provided on the same. So, investors, I think to conclude, in my personal opinion, keeping the valuations of the company in mind, the continuous pledging of more and more shares with lenders just to stay in the agreed loan to value ratio should continue spreading more caution and fear amongst investors about the financial distress of the company, leading to further downfall in the stock price. Also, since we established the promoter's incompetence with capital allocation decisions, be it while buying overvalued shares of the company and funding them by way of pledge of own company shares, or utilizing funds for expansion in overseas markets, or even while selecting the right board, keeping in view the company's objectives and business needs, I think an investor might be better off staying long the company and one should exit immediately.